when it looked like confidence was returning to Australia's housing market, Reserve Bank threw us another curveball. Now, the latest Australian Bureau of Statistics figures show home loans rising strongly, including a surge in first home buyer activity, suggesting buyers were starting to lean back into the market. But here's the catch. These lending figures were recorded before the most recent interest rate rise. So the big question is, are we seeing the early stages of a new property upswing, or was this simply the last burst of optimism before higher rates bite again? Because when interest rates rise, it's not just the borrowing capacity that falls, it's really buyer and seller confidence. It's confidence that moves the markets. Hey, and stay with us because we're going to have a chat about building approvals and auction results as well today that suggest the supply problem isn't just continuing, but actually getting worse. So welcome to this week's Property Insider, where Australia's leading housing economist, Dr. Andrew Wilson, and I take you behind the headlines to uncover what's really going on in Australia's property markets. Each week we like to share the data, the trends, the insights the mainstream media often misses, helping you make smarter, more confident investment decisions based on facts and not on fear. So whether you're an investor, home buyer, or simply property curious, this is where you're going to get the information you need. So Andrew, the Australian Bureau of Statistics just released fresh data about home loans, and on the surface they look positive. What are your thoughts about all this?
Well, no surprise, Michael. Of course, it is December quarter data. This particular data set used to be released monthly, but along with a number of other, what I regard as pretty important data sets, such as retail sales, there's been a significant shift in the way the ABS handle this data. The importance of the home loan data was that it was able to give us an insight into buyer types, because it did not just give us the aggregated total lending data, but it also gave us data for owner-occupiers, first-home buyers, and investors. So it showed us sort of where the buyer energy, the buyer type energy was in the marketplace. But getting back to the data, no surprise, we saw a big surge over the December quarter. We've had a booming housing market last year, courtesy of those 3 interest rate cuts, which were a surprise to some, to be quite honest, and maybe we're having to pay them back a little bit now. But nonetheless, they did what they usually do, and they created strong prices growth almost across the board. Well, perhaps it was across the board. But so we're seeing the resultant home lending data following that strong lead from lower interest rates and higher house prices. The overall data showed that home loans totally were up. These are home loans, so it's not invested, they're only for domestic purposes, up by 5.1% over the quarter. Owner occupiers increased by 4.8% in total, and that number includes first home buyers. But when we separate first home buyers from the data, they are up by 6.8%. And of course, Michael, that would have been the first indication of the impact of the federal government's new first home buyer policy, which of course was enacted in October. So early signs of that. I think we'll continue to see some positive signs in terms of first home buyer lending when we get the next lot of data. But, Michael, perhaps someone should tell the government that first home buyers are also affected by higher interest rates. So it's like you're giving with one hand and taking away with another in terms of those policies to first home buyers to get them into the market, but also offset by higher interest rates. But nonetheless, we did see an increase, an expected increase in first home buyer numbers over the December quarter. And investors that have been really up and about in the housing market over the past 12 months, they are up by 5.5% over the quarter. Total home loans surged by 13.4% over the year, Michael, which isn't that dissimilar to the growth in house prices over the year. So we can see that's a correlating data set for us in terms of housing market insights. It's just a shame we don't get this data monthly as we used to do. But the ABS has also said that we need to take perhaps this data with a grain of salt to some degree, because there are some reliability factors apparently, particularly from the banks, in terms of the inputs that the ABS gets. But nonetheless, it does marry with what we would expect, given very strong prices growth in our capital city markets last year. New South Wales was the highest again for lending over the quarter, total lending, and annual growth. Victoria, that revival market of Victoria, Michael, shall we say Melbourne, it was the highest in terms of annual growth. And we have seen Melbourne turn around after a couple of years in the doldrums. Again, a reflection of those lower interest rates improving affordability and adding confidence to what's been a stagnant Melbourne housing market. But when we break it down into the bits and pieces, we can see that over the past year, which I think is very interesting, investor activity has certainly led the charge, up by 23.6% over the full year compared to the previous year, Michael. And of course, that's 2025 compared to 2024. First home buyers up by 9.1%. I would think that will continue to grow, but we need to watch out for the impact of higher interest rates. And when we break it down into the particular state environments, New South Wales was the top for home loans again over the December quarter. Investor loans in New South Wales led the charge, significantly higher than any of the other states for investor loans. Investor loan growth, however, was highest in Victoria, up by nearly 38% over the year. So I guess that reflects the different mindset that investors had in terms of the Victorian housing market, particularly given those high yields which would have attracted investors once the market confidence started to improve. High yields, particularly in the Melbourne housing market, which has started to ease because rents have risen quicker than house prices or home prices. When we look at first home buyer numbers, Victoria, as usual, Michael, had the highest number of first home buyer loans. Again, this reflects that, what I perhaps could say, very generous Victorian government first home buyer policy, where they have a shared equity arrangement with those that are eligible first home buyers in Victoria. And that has proven to be quite successful in terms of the number of first home buyers getting into the market, still tops in Victoria. And of course, Victoria, certainly versus New South Wales, tends to be a more affordable option for first home buyers. But when we see the growth in first home buyer activity, New South Wales actually has recorded the strongest annual growth for first home buyer loans, Michael, well ahead of everybody else, including Victoria. So no real surprises with that, with the first home buyer data that's come out, and all the buyer data and investors and owner occupiers in total for the December quarter. And we await the next quarter, Michael, and that'll give us an insight into the impact of perhaps just one interest rate increase. We'll wait and see in another 3 months when the data is released.
Well, it's a pity it takes so long to get the data, and we know that even though interest rates have only risen 0.25%, it's affected consumer confidence even more than maybe it's affected their bottom line. And there's currently fewer properties on the market than there has been on average over the long term. So even if a few buyers drop out, there's still not enough supply for not just the first home buyers and not all the immigrants that people talk about pushing up the property values, but just average Australians moving through their life stages, the demographic changes, moving into family formation stage, baby boomers wanting to right size or downsize, people divorcing, more single households. So there's a lot of factors that are going to hold up property values in this year, I believe.
Well, that's right, Michael. But of course, once again, we're exposed to the hysterical headlines, in regard to the impact of interest rate rises. I mean, just as a lesson for that, it's coming up to a year when we had the US announce its new tariff policies, which was supposed to be the end of the world, of course. And of course, the Australian share market, as usual, underperformed versus all the other share markets, as it reflected to all the scary headlines and the panic that set in then in regard to what was going to happen with our economy as a result of trade issues. And the Reserve Bank was in on that one too. And we've just seen the interest rate or the inflation data released from the US, and it's now low inflation. So not only has there been no impact, inflation is falling to low levels, and they're now talking about the Goldilocks economy in the US, which is low unemployment and low inflation. Who would believe, given the nonsense that was presented in our media a year ago, or just under a year ago, in regard to those tariffs, US tariffs. And of course, we're getting similar pronouncements now, once in relation to higher interest rates. But we'll wait and see. But there's still plenty of energy in the market, and we'll have a look at what happened in the latest auction results shortly.
Forward to that. I guess the lesson from all that is don't pay as much attention to forecasts as you do to looking at history. You do much better off looking at what's happened in the past and getting perspective and learning lessons from that than looking at forecasts. Now, I know one of the other data sets that you and the team at My Housing Market look at carefully is home building activity, and in particular, home building approvals, because we know it's supply and demand that's affecting property values. The latest home building approvals came out. What did that show?
Well, it was a down month. That was the month of December, Michael, was the latest data from the ABS on home building approvals. We do see this bounce around from month to month because typically we have a surge in apartment approvals and then a not such a strong following month, because we do get typically strong numbers, single high apartment approvals, one particular development, and then it's not followed up the following month. So no surprise there. But the underlying trend remains underwhelming, Michael. When we look at what we saw was a surge in unit development last year, courtesy of, I guess, a more relaxed environment in Melbourne and Sydney for unit approvals, high density approvals. That now seems to be losing steam. The real concern was that house building approvals have really been going nowhere for the best part of 12 months and are starting to go backwards. Let's remember that, and without getting too pointed here, there's now some talk that the government is going to change the rules for capital gains tax for investors because they're concerned about, affordability in our housing market. So I'm not sure how the electorate's going to, and the plan is that they'll have fewer investors and therefore they'll get more first home buyers. Of course, the crux for first home buyers who don't have a trade-in into the market is that they're looking for lower prices. So this is a policy by the federal government clearly designed to put downward pressure on house prices to bring more first home buyers into the marketplace. Not sure how that one will work, but and I'm not sure how first home buyers, once they do become a homeowner, feel about an environment where there's lower prices, lower house prices, and they don't get the capital growth that their parents and grandparents enjoyed. And this is supposed to be the gobbledygook theory of changing intergenerational wealth transfer. So it's just more nonsense. And in a sense, it's housing socialism, Michael. And we saw this promoted by a previous Labor Party back in 2019. And of course, that was one of the factors perhaps that caused Bill Shorten to lose the unlosable election. So I guess it's the government's beware of the fiddling with what are firmly entrenched positions in Australia's housing market. So in terms of building, of course, Michael, that's been another supposed positive policy position for the government, but they've fallen well short of their, I guess it was a target rather than an actual plan. But this is the point of the latest building approvals, when we do look at the trend, that overall we're still tracking at about 180,000 building approvals per year on the latest data. Of course, the plan was for, I think it was some millions of properties in the next 5 years. It would have needed around about, to match that plan, 240,000 completions a year to meet that target. And that's not spoken about anymore because we're still, ridiculously behind that particular target, which will not be met. And the problem is now that after a promising 2025 for apartment approvals, that's now starting to look like it's running out of puff. So the plan to improve affordability, to work on intergenerational wealth transfer through more supply is heading south. And maybe that's why the Labor government is now shifting to their hobby horse of reducing investor numbers in the marketplace. But also, I guess, if they do introduce a reduction in the discount for capital gains tax for investors, it'll mean more money to pay for, and I think perhaps they are looking to improve their bottom line in terms of income. So it's a bit of a hobby horse going forward. And as we've seen with other governments, Michael, as I said before, beware of fiddling with the housing market. The electorate's pretty connected to house prices. And as I said, I don't think first home buyers are going to be too happy once they do get their property about not getting the wealth or wealth generation and financial security that their parents got through more of an open housing market environment. I think it's interesting when we look at the breakdown in state activity, Michael, and this sort of reinforces just that we've gone nowhere in terms of improving our supply line over the past 12 months. We're now seeing 3 of the major capital cities falling below the line in terms of building approvals for houses. Melbourne is now down 5.7% over the year compared to the previous year. Brisbane's down 2.6%. And Adelaide down 0.1%. And Adelaide and Brisbane are very strong housing markets, continuing to rise, particularly Brisbane. And that's sobering news for those that are looking for more affordable property in Brisbane, where the number of houses that are being approved is now lower than where it was the year before. And even the other capital, Sydney, up 4.7%, Perth up 5.5%. I'm not sure that's going to be anywhere near likely to match demand as it's coming through, particularly in that Perth market, Michael.
Yes.
And when we look at the big picture in terms of why we have this undersupply, we can see that we're still down, particularly in terms of units, around 41% of annual activity compared to the peak way back in 2015 and 16. So we bring this to you, Michael, because this data every month, because it just reinforces the fundamental law of economics, and that is supply, of course, the law of supply and demand. As you get, regardless of the wishes of governments, as you get less of you in terms of steady demand and rising demand for housing in Australia, you will get higher prices. So no joy there for improving our supply line, either in the short term or the longer term, Michael.
I just wanted to remind you that this is not specific investment advice because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of the opportunities the current property markets are offering. So why not have an obligation-free chat with one of the wealth strategists at Metropole to discuss your goals, your options, and what you could do. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through strategic property and wealth advice. Remember, property investment's a process, not an event, so you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a home, go to metropole.com.au and organise a time for an obligation-free chat. You're going to find that at Metropole we're big enough to tip the scales in your favour, but still small enough to care. And since we don't have any properties to sell, our advice is independent and unbiased. Well, these are all looking back at what happened at the end of last year, and that's why I love having a chat with you each week about what's happening in the auction markets, which really tells us how buyers and sellers are feeling in real time. We've now had a couple of weeks of the market getting to accept the fact that interest rates have risen and may rise again, and it also came at a time when there were now more auctions coming up on the weekends now that we're into February. How did the market respond?
Well, I don't think we could say that there was a clear indication on activity and confidence, I guess, one and the same, that from that higher interest rate that were announced a couple of weeks ago, Michael. I think it was a steady overall results for auction markets. As you said, we're getting into the stage now where we have enough listings, enough observations to get a reasonable result. We started the year quite strong, but it was a small number of auctions that came up, and it was actually the last week in January when we got our first run of auctions. But we're now into our third week, second week of February. We're going to see a surge in auctions over the next couple of weeks, particularly in Melbourne, as it leads up to its first Super Saturday of the year. That's the pre-Labor Day weekend or week. So plenty of auctions, plenty of activity, plenty of choices for buyers, plenty of competition for sellers. But the results, I think, were quite reasonable, Michael. Sydney had over 1,000 auctions, which is a very big number for Sydney in February. Its auction clearance rate was well down on the week before. In fact, the first couple of weeks for the year in Sydney have been boom time results of 82%. And it's a bit more rational, I guess we could say, 73.9% clearance rate, which still is in favour of sellers.
Very strong result, Andrew, in context.
Absolutely. And maybe there was some sense in the Sydney market that it was impacted by concerns over higher interest rates. But when we look at the data, Michael, the Sydney market was very strong in its upper price ranges. When we look at the regional data, the lower north, the inner west and the eastern suburbs were very strong markets, particularly the lower north again. And it was the lower priced areas in Sydney that had the lower clearance rate. So there may be some issues there in that segment of the market that reflect higher interest rates, but certainly the upper part of the market just chugging along quite nicely in Sydney again. So again, it's that part of the market that's not likely to be affected by interest rates, higher priced areas, Michael. But we couldn't say the same for the other markets. They were just really steady as she goes. Melbourne, a very similar clearance rate to the week before, just under 70%. It was similar to where it was the year before. Auction numbers, 828 auctions, so quite a challenging market there in terms of the numbers. Brisbane, higher auction numbers and a higher clearance rates. I'm not sure the Brisbane market is going to be affected that much by interest rates. It's still a very strong market, Michael, as those clearance rates reflect. As we know, anything over 50% is a good result there for sellers in the Brisbane market. Adelaide, back-to-back 80% results, so no sign of any problems in that Adelaide market, Michael. That's a boom time result in Adelaide. We know that's been also similar to Brisbane, a very strong market. And Canberra also a little bit lower, but these clearance rates are well above where they were, or certainly higher than where they were a year ago in the Canberra market. So I think all in all, Michael, with the exception maybe of Sydney, all the other auction markets I would have suggested performed quite well in the face of a lot of negative commentary. And it was just business as usual, I think, for those markets. And as I said, even the Sydney market had parts of it which were quite strong. So, and when we look at the Melbourne market regional breakdowns, it was actually the higher priced areas that were the underperformers, again, the inner east, and the lower priced areas have kept finding buyers, Michael. So we need a couple more weeks to see this pan out. And of course, it is still early days, but these numbers, I would suggest, still reflect confidence in most of our housing markets going forward, particularly those markets that had extraordinarily strong results last year seems to be continuing on. And as we saw from the building approval data, there's no sign, I guess, at the organic level of more supply coming through to ease the high demand for property.
Well, I guess the result of listening to all this is that we're not in the crashing markets that some predicted. It's a market in transition, one where the relationship between confidence, rates, supply is going to determine whether the recovery we saw late last year continues, stalls, or evolves into something stronger. So I look forward to catching up with you each Monday to put these Property Insider chats together. Thanks, Andrew.
Thanks, Michael.